Good morning, students. Good morning, Ganesh. This is CA Vibhavadhavan, and we are going to start the next unit, that is unit and batch costing today. So a lot of questions we are going to do, and I believe there should be an understanding of cost sheet to understand this unit and batch costing. So this is basically a type of costing where how we calculate the cost per unit. What is the cost object here? So in unit costing, every unit is a cost object. In batch costing, every batch is a cost object. Okay, so a lot of things to learn. Let us see. Let us start. Okay, unit costing. Then what exactly is unit costing? Unit costing is that method of costing where the output produced is identical and each unit of output requires identical cost. So in unit costing, all the products are identical, so that one cost is applicable to all the units of that product which are produced. All right. So if 20 units are produced, or if 40 units are produced, so only one cost per unit will be applicable for all the products, because all the units of that product are identical. Clear? That is where we can use unit costing. This method of costing is followed by industries which produce single output or few variants of a single output. So if I produce only one output, then all the units of that output will be the same because the industry is producing only one product. Clear? So that unit cost will be applicable to all the products whatsoever that industry is producing, because the industry is producing only one product. So for that purpose, unit costing will be applicable. So under this method, all the costs are collected. All right. So all the elements of cost, I hope you know by now, all the elements of cost, material, labor, expenses, overheads, all are elements of cost. So all the cost for that product will be accumulated. Direct material, direct labor is part of prime cost. And then we have the three overheads which are added at different landmarks. First, we add the factory overhead to get the works cost. Then we add the admin overhead, then selling and distribution overhead, and then we calculate the profit to compute the sales. So every element of cost will be accumulated and collected to find out the total cost. And then from the total cost, we will calculate the cost per unit. So the first step is to calculate the total cost of that product. In total cost, then we should have the total units of output produced, total output. So total cost divided by total output produced, or total number of units produced. As you can see, cost per unit is equal to total cost of production divided by number of units produced. So you will get the cost per unit. This per unit will be applicable to all the units produced in that particular factory. Okay. This method of costing is applicable in industries like paper, cement, steelworks, breweries, etc. So they produce identical products and have identical costs. So if a factory is producing paper, every paper will be the same. It should be identical if unit cost has to be applicable. So we have one illustration to understand. The more and more illustration you will do in unit and batch costing, the more and more concept basically you will understand. See, in unit costing, there is no different concept. It's all what you already learn. Like you have learned the cost sheet, you have learned the elements of cost. It's just the application, how we actually calculate the unit per cost. So raw material consumed, then direct wages, machine hours worked, machine hour rate, office overheads, it's given, selling overheads are given, unit produced, and so on. So just take note of this question. Students, how you have to approach the question, any question in the cost sheet or in the cost accounting, you first have to understand what is given in the question. And second is what you have to find out. And the most important thing is the third part. Third part is how you have to calculate what you are supposed to calculate. Clear? So first of all, you just observe, just be thorough, whatever is given in the question, what is provided to you in the question. Second, what are you supposed to calculate? So in this question, you have material, wages, machine hours, office, selling overheads. That means it gives you an idea of the cost sheet. Clear? All the elements of cost. We have material, direct material, we have direct labor, then we have all the three overheads. So that gives a idea of that you have to actually make a cost sheet out of it. You are required to find out the cost per unit and the profit. So now the second thing which you have to find out is what you're supposed to find in the question, what is being asked from you. So here you have to find the cost per unit. Now you have to think how you will calculate the cost per unit. There where you will get an idea how to start the question. So if you have to find the cost per unit, what is the requirement? What you have to find out? You need total cost and you need total units. Then only you will find the cost per unit. And once cost per unit is there, you should have the sales because they're asking the profit also. All right. So you have to be clear in your mind how you have to approach this question and what is required. And what is required is how you have to find out what is required. So for that, you need total cost in this question and total units. Total units are already there. 10,000 units at 120 each. So these are the selling price. 120 each is the selling price per unit. 10,000 are the units. Clear? So units produced and sold, 10,000 are the units. So we have the total units. Units produced and sold, both are same. That means there is no stock. All right. Units produced are equal to units sold. That means there is no stock. So 10,000 units, we have the total units. Now we need the total cost. How we will calculate the total cost? We have to follow it gives us the idea of the cost sheet. All right. So let us start doing it. Good morning, all of you. A lot of students have joined. Good morning, students. Good morning, all of you. Yes, batch costing is used by pharmaceutical because medicines are manufactured in batches. Yes, you are right. So let us just start the question. You have to make a statement of cost. So the statement of cost when you will make the total cost also and cost per unit also. Clear? So if they're asking the cost per unit, that means you should have total cost and cost per unit for every element of cost. You should have the cost per unit. So raw material consumed is already there, 4 lakh. Clear? Direct wages already 2,40,000. So material and direct material and direct wages will give you prime cost. Okay? Direct material and direct wages will give you prime cost. Then to the prime cost, what you add? You add the factory overheads. So factory overheads, I told you in the previous sessions also that overheads are absorbed in cost accounting. Overheads are absorbed in cost accounting on the basis of some predetermined rate. Could be per labor hour, could be per machine hour, or could be a percentage of direct labor, could be a percentage of prime cost. It could be anything. Any rate of absorption can be applicable. In here, the absorption rate is for factory overhead, it's machine hours. So machine hours work 3,200 hours and 40 is the machine hour rate. So 3,200 into 40 will be your factory overhead. So we'll be adding to the prime cost. Prime cost has to be 6,40,000. Prime cost should be 6,40,000, 4 lakh plus 240. To the prime cost, you add the factory overhead. So this will give you the factory overheads. So factory overheads, how much will be the factory overheads? 3,200 into 40. 1,28,000 will be the factory overheads, which we actually calculate as per 3,200 into 40. We add to the prime cost. When we add the factory overheads to the prime cost, what we get? We get the works cost. So after works cost, we adjust the stock of WIP, but there is no stock, no raw material, no finished goods. There is no stock. So the works cost with gross works and net works cost will be the same. To the works cost, we add the admin overheads. 10% of works cost is the admin overhead. Can I have the works cost, please? Can I have the works cost, please? Dhyanesh, okay, Dhyanesh has just done the question, but we will do it gradually. Can you tell, anybody can tell the office overheads? It's 10% of works cost. Can I have the works cost or should I calculate? 7,68,000 is the works cost. So 10% of works cost, 76,800 should be office overheads. You add it to the works cost. Office overheads, which is admin overheads, will be added to the works cost. It's absorbed as 10% of works cost. All the three overheads will be absorbed. Office overheads are absorbed as 10% of works cost. So after adding the office overheads to the works cost, what do we get? Yes. After adding office overheads to the works cost, what we get? Can anybody tell me what we get after adding office overheads to the works cost? I believe that you have the understanding of cost sheet. So what we get once we add office overheads or admin overheads to the works cost, what we get? Very good. Cost of goods sold. So cost of production or cost of goods sold will be same because there is no finished stock. Clear? There is no closing or opening of finished goods. So cost of production will be equal to cost of goods sold here because there is no finished goods stock. So what will be cost of production or cost of goods sold? 768,000 plus 76,800. It will come out to 8,44,800. So we have got the cost of production or cost of goods sold. To this, we add selling and distribution overheads, which are absorbed as 20 per unit. 20 per unit of units sold always. Selling and distribution, if it is absorbed on unit basis, it will be absorbed on units sold, whether it's given in the question or not. Selling and distribution overheads will always be absorbed on units sold. Clear? If otherwise given in the question, if nothing is mentioned, you have to absorb on units sold. Units produced and units sold are the same in this question because there is no closing stock. So 20 per unit into 10,000, selling and distribution overheads are 2 lakh. We get the cost of sales. Cost of sales are 10,44,800. Yes, COGS, great. Cost of sales are 10,44,800. Now, profit for the week. How much should be the profit? We don't know the profit. To the cost of sales, we add the profit. We don't know the profit, but we know the sales. Sales are 10,000 into 120 each. Sales are 12 lakh. Sales are 12 lakh, so balancing figure has to be the profit. The balancing figure will be the profit. Can anybody tell me the profit, please? Can anybody tell me the profit? It has to be 1,55,200. All right. So that is the profit. Now you have calculated the profit. You have to calculate the cost per unit. Students, you have to calculate the cost per unit for every element of cost. 4 lakh. 4 lakh is the raw material cost per unit for raw material. Divide everything by 10,000. For cost per unit, units are 10,000. On the top of the sheet, you have to write 10,000 for every element of cost, for every landmark. Whatsoever you have written here, you have to calculate the cost per unit. So cost per unit for raw material, 4 lakh divided by 10,000. Cost per unit for direct wages, 2,40,000 divided by 10,000. Overheads, then prime cost is 6,40,000 divided by 10,000 will get your CPU. Then you have add factory overheads for every element of cost, for every stage in this statement. You have to calculate cost per unit also. Clear? Yes. So that is the whole. Now I hope you have understood. So we have calculated this cost per unit. So this is the total cost. Cost of sales is the total cost here. 10,44,800 is your total cost. You have got the total cost. You have the total units. Can't you calculate cost per unit? Yes. So cost of sales will be the total cost here divided by total units. You will get the cost per unit. So 10,44,800. How to calculate cost per unit? 10,44,800 divided by 10,000. Total cost divided by total units. Total cost divided by total units will get you cost per unit. Okay, students, any doubt in this? Good. So I'm just showing you so this is the statement of cost per unit. See, we have done material, then labor, and you have to calculate the cost per unit also. You have to divide everything by 10,000. Cost per unit. For every element of cost, you have to calculate cost per unit also along with the total cost. So every element of cost divided by 10,000, because 10,000 is the units produced, 10,000, 2,40,000 divided by 10,000, 6,40,000 divided by 10,000. Here, your units produced and sold are same. So everything will be divided by 10,000. When they have a stock and units produced and sold are different, then selling and distribution and sales will be accordingly. All right. Here they are the same. So you have to divide everything by. So this is the cost per unit. This is the first answer of your question. Total cost divided by total units. You will get the cost per unit. This is the profit. The second answer of the question is the profit. So you have got it. All right. Yes, cost of sale per unit is 104.48. Any doubt in this question, students, before we proceed? I hope this question is clear to you. Let me give you a final look of this question. I've explained you also how we have done, and then I've shown you the proper, clear picture of the statement. Okay, you can take a note of this also. Shall we proceed? Any doubts? Okay, good. So let us proceed to the next question. Just take a note of this question. Second illustration. Unit and batch costing is a very good medium to clear your doubts and concepts in cost accounting. Okay. So take a note of this question. Let us try to understand this question. Athar Pharmacare Limited produced a uniform type of product. Uniform. For unit costing, it has to be a uniform type. Uniform means same, homogeneous types of product, and has a manufacturing capacity of 3,000 per units per week of 48 hours. So the maximum capacity is 3,000 units per week. Okay. From the records, the following data are available relating to output and cost of 3 consecutive weeks. So output and cost of 3 weeks are given. See, week number 1, week number 2, and week number 3. So you have given the data of 3 weeks. Units manufactured, so 1,200, 1,600, and 1,800. So total manufacturing capacity is for 3,000. So in first week, they could manufacture 1,200, in second week, 1,600, and in third week, 1,800. All right. That means not fully utilized. Direct material, direct wages, and factory overheads. What now? This is the information given. Second part, what is required with us? Assume that a company charges a profit of 20% on selling price. Find out the selling price per unit when the weekly output is 2,000 units. So they have given now, you have to make an understanding on the basis of this information. Whatever is derived out of this information, that rate will be applicable for 2,000 units. So we have to find out the rate as per the information given in the question, and then that rate or price per unit will be applicable for 2,000 units. Clear? So first, let us understand. And one thing important I wish to tell you here, I believe that you should be knowing, direct material, direct wages are always variable cost. Clear? They are always variable. So prime cost, what you know, direct material, direct wages, direct expenses, prime cost is 100% variable cost. Prime cost is always variable. Overheads are semi-variable. All right. Overheads are because they are absorbed. They are semi-variable, but prime cost is always variable. So you need to understand this. Okay. So the company charges a profit of 20% on the selling price. That means if you have to find first of all, you have to find the cost. So on the cost, you have to charge a profit of 20% on selling price. That means first of all, you should have the total cost. Now, First of all, we have to find out the total cost for these units, for these 3 weeks, and then the rate will be applicable to 2000 units. So that is the second part of the question. First, let us complete the statement of cost for these 3 weeks, which are already been done. All right. So direct material, direct wages, plus factory overheads. All right. So all the three will give us the total cost. That means I'm just trying to explain you how you have to approach the question. You should know, you should understand first before solving the question, how you have to do it. So direct material plus direct wages plus factory overheads will give us the total cost. This is we are supposed to do. So after total cost, we have to add the profit, and then we will get the selling price. All right, the sales. So this is supposed to be done. So let us calculate the total cost first. So direct material, now you have to just make a statement of cost. 1200, 1600 and 1800. So 1200, 1600 and 1800, and then total cost. All right. So you have to do the total cost also. Let me just erase this. Okay. Try to do the question. Yeah. Okay. So for 1200, for 1600, for 1800, and the total cost also, because you have to find out the selling price per unit. You need the total cost. So first of all, direct material we have. So direct material here we have 9,000, 12,000 and 13,500 and the total direct material. But first of all, you have to write the units also. Units. Clear? 1200, 600 and 1800 are the units. Direct material is given to you. Direct material, direct wages, the prime cost is always variable. Variable means they change with the units of output. If we can see how you will actually prove that direct material is a variable cost. If you divide 9,000 divided by 1200. 9,000 divided by 1200, 12,000 divided by 1600, that means the units, 13,500 divided by 1800. Can you tell me the per unit for all the 3 weeks for direct material? Can you calculate direct material cost per unit? So 9,000 is for first week and units are 1200. So how much is the direct material cost per unit? Please calculate for first week, and then for second week, and then for third week. Can I have the direct material cost per unit? Yes, variable means direct cost can change time to time. No, direct cost can change from output to output. So if we change the output, variable cost and fixed cost, what's the meaning? Variable cost changes with every additional unit of the output produced, every additional unit. If I produce 10 units, let us say variable cost is 10,000. Now, if I'm producing 11 units, the variable cost is, let us say 11,000. That means whatever cost which changes in equal proportion to the additional unit produced, that is variable cost. And fixed cost is which remains fixed till the particular manufacturing capacity, and after that it can increase. So fixed cost cannot directly change with every additional unit of output. Fixed cost remains constant till a particular manufacturing capacity. But variable cost will change with every single additional unit of output also. That is variable cost. So now here, come back to the question. Can you calculate direct material cost per unit for all the 3 weeks? Anybody who has calculated? Yes, that means it's 7.5, 7.5, 7.5. That's exactly how it can be proved that variable cost per unit is always the same. The total changes, but per unit remains same. All right. So variable cost per unit is the same for all the 3 weeks. That is why direct material is a variable cost. Do the same thing for direct wages to find out whether it's a variable or a fixed cost. If it's a variable cost, per unit will remain the same. So 3,600 divided by 1,200, 4,800 divided by 1,600, 5,400 divided by 1,800. Calculate direct wages per unit. Is it same or is it changing? Direct wages per unit. For all the 3 weeks, can you get the direct wages per unit? Can I have the direct wages per unit? Yes, it is 3. So you will find out it will be 3 for all the 3 weeks. That means direct wages is also a variable cost. To explain how it is a variable cost, in variable cost, the cost per unit will remain the same. So you increase the output, the total variable cost will change, but per unit will remain the same because the numerator is also increasing and denominator is also increasing in equal proportion. That's why per unit will remain constant. I'm repeating, in variable cost, the cost per unit remains constant because the numerator, the total cost and the total units change in equal proportion. That's why cost per unit always remains constant in variable cost. So direct material and direct wages are variable cost. All right. Now coming to factory overheads. Do the same exercise for factory overheads. Divided by 1200, divided by 1600, divided by 1800. Can you calculate the factory overheads per unit also? Let us say, is this variable? Now, factory overheads are not fixed because fixed means the total amount should be same. For first week is 31, for second week is 33, for third week is 34. So factory overheads are not fixed totally. All right. Now, let us say, are they variable? Can I have answer for factory overheads? All right. For direct wages, direct labor, it's coming 3 for all the 3 weeks. So direct material is variable. Direct wages is also variable. Let us find about factory overhead. Calculate the factory overhead per unit also. Okay. Yes. So one student has calculated. It is coming 25 for the first week, around 20 for the second week, around 18 for the third week. Now, students, factory overheads are not completely variable because the cost per unit of factory overheads is changing in every week. They are not totally variable and they are not totally fixed also. Why? Because the total amount is changing in every week. Had it been fixed factory overhead, the total amount should be same. But here it's 31 and 33 and 34. So factory overheads are semi-variable. Semi-variable means they are variable also and they are fixed also. So that means they have an element of variable cost also and they have an element of fixed cost also. Now here is an exercise for you. We have to split the factory overheads between fixed and variable cost. We have to split the factory overheads between fixed and variable cost. So how we can do here? You need to understand. Now, let me just clear the things. So I'm just erasing this off so that I will just tell you how we do it. All right. So we have to, yes. Now, how we have to split the factory overheads between fixed and variable. So the first method where we, according to this question, we can do, take the total of the change in factory overheads of 2 weeks. So change in factory overheads divided by change in the units. Clear? So change in the factory overhead between 2 weeks. What is the difference between the change in the factory overheads? 2000. You have to calculate the variable proportion in 31,000. How much is the variable cost and how much is the fixed cost? So how we can split the factory of the fixed and the variable? Let us take out the variable first. The balance will be fixed. So how we can do? There's one method we can split the semi-variable overheads. How we can do it? The change in the factory overheads divided by change in the units. So I'm taking the information, the amount of 2 weeks, first and second week here and first and second week here. So change in the amount of factory overheads is 2000 divided by change in the units, 400. So 400. Change in factory overheads divided by change in the output of 2 weeks. So how much you will get? 2000 divided by 400. Do it. How much it is? 5 per unit. So it is coming 5 per unit. We have calculated the variable cost per unit in 31,000 and 3,000. So 5 per unit will be the variable proportion in this factory overheads. I'm repeating, 5 per unit will be the variable cost per unit. That means 5 per unit. Now you calculate the variable proportion. 1,200 into 5. 1,200 into 5, 6,000 should be the variable cost in 31,000. 6,000 will be the variable proportion. So how much has to be the fixed proportion? 31,000 minus 6,000. Fixed proportion will be 25,000. Fixed proportion will be 25,000. How we have done it? We have taken the difference between the amount and the difference in the units of first and second week. So 2,000 divided by 400 units, 5 per unit, we have calculated the variable cost proportion. So 5 per unit means, and the units are 1,200, so it will be 6,000. 31,000 minus 6,000 is fixed cost. Let us calculate for second week. 5 per unit into 1,600. 5 per unit into 1,600. Variable cost for second week is 8,000. 33,000 minus 8,000. Calculate the amount, please. 33,000 minus 8,000. Calculate the amount here. How much is the amount? 33,000 minus 8,000 will come out to 25,000 again. See, fixed cost total always remains the same. Repeat it for week 3 also. 5 per unit was the variable cost. 1,800 into 5. 1,800 into 5, 9,000. 34,000 minus 9,000 again comes to be 25,000. See, this is the property of a variable cost and the fixed cost. Variable cost in total always changes. Fixed cost in total remains constant. All right. So this I will just explain you with the help of here also. I'm just variable cost. Okay. Variable cost and fixed cost, total and per unit. So always remember, variable cost in total changes, but in per unit, it remains constant. All right. Fixed cost in total remains constant, but per unit, it changes. Why? Total cost by total units. Total cost by total units. In variable cost, total cost changes and total unit also changes. So the numerator is also changing and denominator is also changing in equal proportion. That's why the per unit remains constant. All right. In fixed cost, the total cost changes, but total unit does not change. That's why in total remains same, but per unit always changes. So this you have also always you need to remember. Variable cost in total changes, but per unit it will always remain constant. Fixed cost, total it will always remain constant, and per unit it will change. All right, because total units keep on changing, but fixed cost remains the same. So in fixed cost, total cost does not change, but total units keep on changing. So per unit changes. All right. So this you need to understand here. All right. So this is basically the statement of cost. I'm again taking you to this question. So we have calculated. Okay. Yes. All right. Now you can find out with this also. If you can take the second or third week, the answer will be same. Difference between the amount is 1,000 and difference between this is also 200. All right. So it will come out to 5 per unit. So we have split the factory overheads, which was semi-variable, to fixed and variable. Clear? So 5 per unit was your variable cost and the rest will remain to be fixed cost. So fixed cost was 25,000, 25,000 and 25,000 for all the 3 weeks. So we have got the direct material, which is variable. We have got the direct wages, which is variable. Factory overheads, we have calculated fixed and variable cost. We have split the factory overheads. So we have got it This was 6,000. This was 8,000 and this was 9,000, and fixed cost is 25,000 for all the 3 weeks. So we have got the total cost, direct material, direct wages, variable factory overheads plus fixed factory overheads. All right. Students, any doubt here? Yes. Okay. So a lot of students, yes, 25,000 will be the fixed cost. We will take it. The answer of 5. What is the answer of 5? I didn't get it. Must be taken to first week or second week. All right. So I hope you have students understood. Let me now show you the statement. Now you'll be able to understand this. Statement of cost and selling price. You have to calculate now for 2,000 units. All right. So we have calculated now the per unit. So here the per unit cost you have to calculate. So we have the per unit of direct material. So what was the per unit of direct material? 7.5. So 7.5 was the per unit of direct material. 3 was the per unit for direct wages. And 5 was the factory overheads variable per unit. So this is how you have to do. 7.5, now you have to apply on 2,000 units. So 7.5 into 2,000, 3 into 2,000. So you get the prime cost here. We have calculated the per unit cost there, and now we are applying because we have to make a statement of 2,000 units. All right. Add factory overheads. We have done that. Factory overheads. Factory overheads means 5 per unit is the variable, plus 25,000 is the fixed cost. So factory overheads, 35,000. That means how we have calculated this? 25,000 is straight away fixed cost. And what is variable factory overheads? 5 per unit. So 5 per unit, that means 2,000 into 5. So 10,000 is your variable fixed cost and 25,000 is your fixed factory overhead, which we have calculated. So this is the total cost. At profit of, now here you have to charge profit of 20% on the selling price. So this is a mathematical thing. I hope you know how to calculate. Profit on 25%, 20%. 20% on sales is given, but you have to calculate on cost. 25% on sales is given, but you have to calculate on cost. So how you calculate? I can show you like this also. You can calculate 56,000 is your total cost into profit percentage is 25% on sales, but you have to calculate on cost. So 25 divided by 75. This will give you the profit. So if you have been given profit on sales, but you have to calculate on cost, the denominator should be less than 100. All right, because 56,000 is actually 75%. So if sales is 100, all right, if selling price is 100, profit is 25. So cost has to be 75. That exactly I've done here. 56,000 is the cost. You have to calculate it on cost, but it's given 25% on sales. But you have to calculate it on cost, and cost should be less than 100. So 25 divided by 75 will give you profit of 14,000. Sales is 70,000. All right. So this is how it has been done. Any doubts so far? Yes. Very good, Danish. It will be 56,000 into 25 divided by 75. So if any time profit is given on sales and you have to calculate it on cost, the denominator should be less than 100. And how much it should be? It should be 100 minus whatever is the profit given. So for example, if the rate of profit is 30%, you will write it 30 by 70. If the rate of profit on sales is 20%, you will write 20 divided by 80. So 100 minus what is the profit, that should be the denominator. Clear? So this is how you will calculate the profit directly. I hope you have understood this. So just brushing up the whole thing. If the information is given, on the basis of this information, you have to calculate the selling price per unit for 2,000 units. So calculate the direct material cost per unit, direct wages cost per unit, variable factory overheads per unit, Per unit we will calculate and then apply it on 2000. All right. And fixed will always remain fixed. Fixed will remain fixed for all the 3 units. Fixed will also remain fixed for 2000 also. So fixed is not going to change with the units of output. So till 3000 units, fixed cost is not going to change. All right. So here also the units are 2000. So fixed cost will remain constant till 3000. Fixed cost is not going to change because 3000 is the maximum capacity of this factory. All right. And once you calculate the per unit, you will be applying it on 2000 units. We have calculated it. So 35 is the answer for this question. 35 per unit is the selling price for 2000 units of output. I hope you've understood this. Any doubt? 20% on. Okay, 20% on sales is given. I'm sorry, it's 20 by 80. 20% on sales. It's 20% on sales, so it has to be 20 divided by 80. 20 divided by 80, 56,000 into 20 divided by 80. Yes, it is 14,000. All right. So I'm again saying it's 20% on selling price. 20% means 20 by 80 in this question. It will be 20 by 80. 1 minute. Yeah. So it's 20 by 80. All right. I'm writing it over here. 56,000, it's given 20% on sales. So 20 by 80. Had it been 25%, then 25 by 75. Had it been 30% on sales, 30 divided by 70. Had it been 40% on sales, 40 divided by 60. So if it is percentage on sales, but you have to calculate it on cost, then the denominator should be less than 100. Clear? So yes, it's 20 by 80. Any doubt, students? Any doubt in this question? All right. Let us move forward. This is the working, what I explained you. This is how we calculate the split between the semi-variable cost can be calculated it into fixed and variable. So you can take for week 1 or 2, or you can take for week 2 and 3 also. The answer will be same. Clear? You can take it for 1 and 2, or you can take for 2 and 3. It will come to be same. So change in factory overheads divided by change in output. So change in factory overheads divided by change in output. So 5 is your variable cost per unit. Clear? So you just multiplied whatever units you want. Fixed cost will remain same. Whatever you are going to do till 3000 units, fixed cost is going to remain the same. All right. So overheads for 2000 units is 10,000 variable and 25,000 fixed. So 35,000 is your fixed overheads. All right. Clear? Very good. So let us move on to the next question. I think we have understood the concept. So the next question in unit costing, try to read the question. Take note of this question. Wonder Limited has a capacity of 1,20,000 units per annum. Per annum means for the whole year. All right. So for the whole year, the capacity was 1,20,000. The production costs are as under. Direct material, see, per unit. Per unit means it has to be variable cost. Direct labor per unit, variable cost. So whenever it's per unit, it's almost always variable cost because variable cost per unit remains constant. Clear? Fixed cost will always be per annum because fixed cost, it changes with time or manufacturing, total manufacturing capacity. Variable cost changes with the units of output. So fixed cost is related to the time period and variable cost is related to the units of output or production. Clear? So variable cost is never time-based. It is output-based, unit-based, production-based. Fixed overheads are generally time-based. So if I'm paying a factory rent of 50,000 per month, so 50,000 per month I have to pay whether I'm doing any production or not. All right. So fixed cost is generally time-based. So overheads, they are fixed also and they are variable also. So overheads are always semi-variable. So in overheads, it's always an element of fixed also and variable also. But this direct cost or prime cost is always variable. Direct cost and prime cost is always variable. Overheads are semi-variable. Okay, overheads are semi-variable. So semi-variable now 20 lakh per annum up to 50% capacity. So we have fixed also and variable also, and we have semi-variable also separately. 20 lakh per annum up to 50% capacity and an extra amount of 4 lakh for every 25% increase in capacity or part thereof. That means if it is 26% extra, it has to be 8 lakhs because they are saying even for a part, the increase will be next 4 lakh. So till 25, till extra 25, it will be 4 lakh. If the capacity is increased by 26%, it will be 8 lakhs. Even for extra 1% also, the capacity will be 4 lakh. So that means all part thereof. The production is made to order and not for stock. That means there is no inventory in this question. If the production program is the factories as indicated below and the management desires a profit of 20 lakh. So management wants a profit of 20 lakh. Now what you have to determine? Average selling price. Average is important. Average selling price at which each unit should be quoted. So first 3 months, 50% and remaining 9 months, 80% capacity. Ignore administration, selling and distribution. So we have to take only one overhead. There are 3 overheads, factory overheads, admin overheads and selling and distribution overheads. But here we have to ignore admin and selling and distribution. We have just to take care of this factory overheads. All right. So how we compile the question? We have direct material, direct labor, that is 100% variable. So it will change in equal proportion to the capacity. Overheads fixed will remain fixed. Variable overhead will be changing as per the production capacity. Semi-variable, they have given how it's going to change. 20 lakh per annum up to 50% capacity. That means this 20 lakh per annum up to 50% is fixed. So whether it's 5%, 10%, 20%, 49%, it will be fixed 20 lakh per annum. So the first proportion up to 50% is the fixed proportion. After 50%, it will be the variable proportion in this semi-variable. So variable proportion is beyond 50, for every 25% increase, you will have an increase of 4 lakh. So it's a semi-variable overhead. Till 50% capacity, this overhead will be fixed up to 20 lakh per annum. And after 50%, it becomes variable. All right. So let us doing it. Start make the statement of cost. And we have to calculate the selling price also. So we need the profit also. First 3 months, 50% capacity, remaining 9 months, 80% capacity. Students, you have to make a columnar of the 3 months. So you have to make for first 3 months and then for next 9 months, because the capacity is different. If the capacity is different, the semi-variable will be different for both the for both the statement. Can you tell me the capacity, 50% capacity? Can you tell me the production units at 50% capacity and at 80% capacity? Can you tell me the units? Please tell me the units. For first 3 months, the factory will be operating at 50% capacity. For the remaining 9 months, it will be operating at 80% capacity. Can you tell me the units at 50% and units at 80%? Let me see who can calculate. Please give me the units at 50% capacity for first 3 months and 80% capacity for next 9 months. So total will make out to 1 year. All right. So for 3 months, we have to make separate statement of cost. So in the statement of cost, you make 2 columns. Of course, 3 columns for 3 months, for 9 months, and for total. All right. So make column for 3 months, then for 9 months, and then the cost. Total cost has to be there always. So can you tell me the units at 50% and 90% capacity? 1,20,000 units per annum. For first 3 months, 50%. For next 9 months, 80%. All right. 15,000, 17,000, 72,000. Any other answer? Any other answer? I need the capacity at 50% and 80%. I need more answers. Any other answer? So 50% is 60,000, 80% is 96,000. Polki, 60,000 and 96,000. Now, some of the students have done it correct and some of the students have done it wrong. Now, students, whosoever has done directly for 1,20,000. So 1,20,000 units. So some Polki has done and some students, this Bal Vinoda has done also wrong. Students, 1,20,000 into 50%. That means 60,000 for first 3 months and 80% of 1,20,000 is 96,000 for next 9 months is wrong. It's 1,20,000 units per annum. Here is the point where the student makes mistake. And once you make a mistake at this starting point, your whole answer will be wrong. Because this is the first step you need to understand. It's per annum. All right. So that means you have taken 50% for full per annum. You have taken 50%. 60,000 will be when it's 50% for the whole year. So when it will be 50% for the whole year, then the capacity will be 60,000. But it is 50% for first 3 months. You have to calculate first the capacity per month. It's 1,20,000 per annum. How much is the capacity per month? It's 10,000 units per month. 10,000 units per month is the total capacity. You have to calculate for 3 months. So 30,000 is the capacity, the full capacity for first 3 months. Now 50% of 30,000 has to be 15,000 and not 60,000. This is where you have made the mistake. And if this is the mistake you have done, the whole answer will be wrong. Because you will calculate everything on the basis of 60,000 and 96,000. So every cost calculation will be wrong. So you have to calculate first monthly capacity. So per month is 10,000 units. For 3 months, it has to be 30,000 total. 30,000 is 100% capacity. So 50% will be 15,000. Similarly, 9 months has to be 90,000. Total capacity is 90,000 because 10,000 per units per month. So 90,000 for 9 months, 100%. This is 100%. So 80% has to be 72,000. So 72,000 is the 80% capacity for next 9 months. Students, have you understood this? Anybody who has not understood this? This is very, very important. If this has been wrong, the whole answer will come out to be wrong. So always never ignore this per annum. Clear? So if it is for first 3 months and next 3 months, it's better to convert it for monthly production capacity. Then you do it accordingly. So 10,000 units per month. So for first 3 months, the total capacity has to be 30,000 and 50% it's operating in first 3 months. So the capacity has to be 15,000 and 72,000 will be the for next 9 months because total 100% is 90,000. Yeah. So 30,000 and plus 90,000 split the production capacity. So this is for first 3 months. This is for next 9 months. And this is 100% capacity. So do it accordingly. Students, any doubt on this, how we have done? Good. Good, Bala Vinodna. I hope now it's clear to you. So now let us try to make the statement of cost. So we have to make for 3 months separately and for 9 months separately. So let me just erase everything else. I hope this you have understood. Okay. So make for 3 months first and 9 months first. So this is for 3 months and this is for 9 months. I have the statement with me, but first let me just explain you how to do it. So units are 15,000 and here it is 72,000. This is important. All right. Now, first of all, direct material, nothing, 90 into 15,000. Direct material is a variable cost. You just have to calculate per unit is given. So you have to just multiply it with number of units. 90 into 15,000 and 19 into 72,000 will be the direct material. Then comes direct labor, 60 per unit. So 60 into 15,000 and 60 into 72,000. So direct material you have done, direct labor you have done. So this you will get the direct cost. Now comes to overheads. Overheads, first take the variable overheads. 100 per unit. So 100 into 15,000 and 100 into 72,000. So again, see if the number of units will be wrong, the whole calculation will be wrong. All right. Good. Very good. I am glad that you have understood. Can't we just show semi-variable cost in working note instead of creating new column? Where you are creating a new column? I'm not getting it. Yes. So direct material, direct cost, keep on calculating the amount. 90 per unit into 15,000, 90 per unit into 72,000. For direct labor, 60 into 15,000, and it is 60 into 72,000. Variable overhead, it's given. First, we have taken this variable portion first. 100 into 15,000 and 100 into 72,000. I hope clear till here. So we have taken direct material per unit. We have taken the per unit cost first and variable overhead per unit. Here. Now let us first split. Okay, we can take the fixed overhead also here. So let us take the fixed overhead now. Fixed overhead is as per the time. Fixed overhead 30 lakh per annum has nothing to do with the production units or capacity. I'm repeating, fixed overhead is time based. All right. So fixed overheads of 30 lakh per annum will be divided proportionately among in proportion of number of months. It has nothing to do with 15,000 units or 72,000 units. Fixed overheads will be divided amongst 3 months and 9 months as per the month. So 30 lakh per annum means for 3 months, it will go to this column, and for 9 months, it will go to this. So 30 lakh for 3 months come out to 7,50,000, and 30 lakh for 9 months come out to 22,50,000. All right. So fixed overheads also we have divided. For 3 months, 7,50,000. For 9 months is 22,50,000. 30 lakh per annum. You just divide in the ratio of 3 months is to 9 months. No units is going to change the fixed cost. So till fixed cost we have done. Now let us come to semi-variable. Any doubt till now? Yes. You just calculate the amount. Keep on calculating. Yes, very good. Fixed cost will be 7,50,000 and 22,50,000. All right. Now let us see semi-variable. All right. Up to 50% capacity. Semi-variable is 20 lakh per annum. If you can see here. All right. Yeah. Up to 50%, semi-variable is 20 lakh per annum. So this is the first 3 months we have 50% capacity. So that means for first 3 months, our cost will be, the semi-variable will only be 20 lakh per annum, because till 50% capacity, this is applicable. Now this is per annum. So 20 lakh per annum up to 50% capacity, you have to calculate it for first 3 months because it is per annum. All right. So first 3 months up to 50% capacity, how much it is going to be? Calculate. 7 semi-variable. So semi-variable in for first 3 months, only this is applicable because this is still 50% capacity. 7,50,000. No, sorry, it will be 5 lakh. Sorry, it is 5 lakh. Let me just erase it for you. Yeah. So 20 lakh for 3 months will come out to be 5 lakh. Only 20 lakh per annum will be applicable up to 50% capacity, because first 3 months we are using 50% capacity, but 20 lakh is per annum. Calculate it for 3 months, it comes out to 5 lakh. For next 9 months, the capacity is 80%. 80% means first 50% plus next 25% plus next 25% plus part thereof plus 5%. All right, that makes to be 80%. First 50%, what is the breakup of 80%? First 50%, the semi-variable overheads are 20 lakhs. For next 25%, it's 4 lakh. And for next 5%, again it's 4 lakh, because it says for every increase beyond 25%, for every next 25%, it will be 4 lakh. So for first 50%, it is 5 lakh. So I'm writing here for 80%, how much it is? For first 50%, it will be, for 9 months, it will be 20 lakh, which is applicable. For next 25%, it will be 4 lakh. And for next 5% also, it will be 4 lakh, because they are saying even for a part, you have to make it an increase of 4 lakh. So the total applicable semi-variable overheads for 9 months, 80% capacity will be 29 lakh per annum. 29 lakh per annum. For first 3 months, the applicable was 20 lakh per annum. For the next 9 months, when the capacity is 80%, the applicable semi-variable overheads are 29 lakh per annum. 20 lakh for first 50%, 4 lakh for next 25%, and 4 lakh for next 5%, because the capacity is 80%. So 29 lakh per annum. Calculate it for 9 months. It's per annum. Calculate it for 9 months. 9 divided by 12. It will come out to 21,75,000. Just check the amount. Sorry, it's 28 lakh. 28 lakh. It will be 28 lakh into 9 divided by 12. It will be 21 lakhs. Okay. So 21 lakhs. It comes out to 28 lakh. 28 lakh per annum. So for 9 months, it will be 21 lakh. Students, any doubt in semi-variable overheads? Any doubt in semi-variable overheads? Very good. So for first 3 months, it will be 5 lakh. For next, it will be 28 lakh per annum. So for 9 months, you have to calculate. It will come out to 21 lakh. Students, any doubt? Any doubt here? Just calculate the total cost. We are done with the total cost. Direct material, it's per unit. Direct labor, variable. It's just applicable per unit. Fixed overheads, we have charged as per 3 months and 9 months. Nothing to do with production capacity. Semi-variable overheads, we have taken 5 lakh, that means 20 lakh was for first 50%. So first 3 months, we already had 50%. And for 9 months, we had 80% capacity. So semi-variable overheads have to be provided as per the percentage capacity. So accordingly, we have calculated for 3 months and 9 months. Can you give me the total cost for 50% for first 3 months and 80% for first 9 months? Can you tell me the total cost for 3 months and 9 months, please? Total cost. Anybody will give the total cost? Total cost. All right. So 50 lakhs. 50 lakhs for 3 months. Students have calculated. 50 lakhs for 3 months. 3 months extra. 3 months extra means it has to be per annum only. It has to be per annum. It's not that you will take directly 8 lakh there. It's always per annum. If 20 lakh per annum is given, that means it's 4 lakh per annum only. All right. For every 4 lakh, for every 25% increase is additional 4 lakh per annum only. All right. It will be per annum. That's why we have made it proportional for 3 months and 9 months. It's per annum. I hope you have understood this. What is the total? Okay, 22, 35. I hope this amount should be 22, 35. Okay, 50,000. Clear? So this is the total cost. Now add for the full year. For 3 months, it's 50 lakhs. For 9 months, it's 2 crore 23 lakhs 50,000. Add for the full year. What is the total cost for the full year? What is the total cost for the full year? Calculate the total cost for full year. I hope the calculations are correct. Two crore 73 lakh 50,000. The total is, let me just write it over here. Okay. So the total is, total cost for full year, 2 crore 73 lakh 50,000 is the total cost plus profit. How much profit we require? Let us go back to, okay. Profit is 20 lakh. We require profit 20 lakh. We require 20 lakh as profit. So it comes to 2 crore 93 lakh 50,000 is the sale. 93,000, 2 crore 93 lakh 50,000 is the total sales. We have to calculate the average selling price. Average selling price means total units. Selling price means we have the total sales divided by the total units. You will get the average selling price, average. That means total of the units are 87,000. So 2 crore 93 lakh 50,000 divided by 87,000 units. Total are 87,000 units. How much is the selling price per unit? Can I get the selling price per unit? Can I get the selling price per unit? Anybody has calculated the selling price per unit? Yes. This is the selling price. So this is the total cost. 2 crore 73 lakh 50,000 is the total cost. We have added the profit, which is given in the question. We want the profit of 20 lakhs. So the total sales is 2 crore 93 lakh 50,000 divided by 87,000 units. The total of units 15,000 plus 72,000, 87,000 units. Divided by units, you will get selling price per unit. Okay, very good. 337.36. So the selling price per unit is 337.36. The answer is 337.36. That is the answer for this question. Students, I hope you have understood this question. Any doubt here? I've gone very slow because these concepts are very, very important. How we have to approach the question, how we are going to solve, just take step by step, one thing at a time, all right? And it will be sorted out. So just break it and solve it, and you will be able to do it. But it should be clear in your mind how you have to solve it, what exactly you require. So in this question, we require the total sales. How we are going to find out the total sales? Profit is given to you. You will find the sales. You need the total cost. Total cost means direct cost and indirect cost. Direct cost is always variable. Indirect cost will be semi-variable. So you have to find out, there should be some calculation in, if semi-variable is given in the question, it has to, we have some calculation, because semi-variable you have to do as per given in the question. All right. Very good, Muhammad Aslam. You always give the answer first. So very good. I am glad that you have understood. Any doubts, students? So now I'll be showing you the proper statement of cost. So just have a look, take a note of this. See the total units, 15,000 plus 72,000, the total units. All right. And this is the total cost we calculated. Profit was already given to us. So this is the total sales. So total sales divided by total units, you will get the selling price per unit. So 2 crore 93 lakh 50,000 divided by 87,000, you will get 337.36 per unit. So this is the selling price per unit. Selling price per unit. All right. Take note of this question. No, you just can't calculate for 5% alone. It's actually given here in this question. If you can see, 4 lakh for every 25% increase in capacity or part thereof. You don't have to take 4 lakh for 5%. No, it is given 4 lakh. You have to take, even if it is 1% extra, you have to take next 4 lakh. So let us see the capacity was 70. Let us say the capacity was 76%. 76% capacity. Let us say for next 9 months the capacity is 76%. So for first 50, 20 lakh. For next 25, it's 4. For next even 1%, you have to take total 4 lakh. See the interpretation of the line. Students, interpretation of the question is very important. You don't have to take 4 lakh for 5%. You have to take full 4 lakh even if it is extra 1% only. You don't have to do proportionately. It's very clearly written. 4 lakh for every 25% increase in capacity or part thereof. So you don't have to take proportionately. Interpretation of the question is very, very important. All right. So this is the question for you. Okay. So students, I hope you must have understood this. We'll take a break of 5-7 minutes at this point and we'll come up with the batch costing after the break. Okay, students, welcome back. We'll be starting with batch costing. We have done enough questions for unit costing. Now, a similar type is batch costing. This is a specific order costing where articles are manufactured in predetermined lots. Predetermined lots means they are in batches, and all units in one lot are identical. Best example is the pharmaceutical industry. So medicines are always manufactured in batches. If you will just purchase a strip of medicine, for example, let us say crocin you buy. So you buy a full strip of crocin. So there are 10 tablets or let us say 12 tablets in one packet in one strip. All right. And let us say 1,000 strips of this crocin is manufactured together. So that means every strip is identical. So they have the same process of manufacture. They pass through the same process. Everything is the same. The raw material, the labor, the process of manufacture, the tools, the other material, the indirect material, everything is same for all those 1,000 strips. So the manufacturing setup is like this, that they have 1 minute. So the manufacturing setup is like this, that 10,000 or 1,000 strips of crocin can be manufactured together. All right. So that is where we can use batch costing. So batch costing means lot of units in one batch, in one lot. All right. So multiple units in one lot, they are manufactured together. That is a batch costing. All right. Under this costing, the cost object for cost determination is batch. So the cost object is per batch. In unit costing, it was cost per unit. Here you will calculate cost per batch. So the questions can come that you have to calculate two now here. First, you might have to calculate cost per batch and cost per unit also. So in the same question, you can be asked to calculate both costs. Cost per batch also. For example, in one batch or in one lot, 10 units are manufactured together. So cost per batch will be the cost for 10 units. Cost per unit will be cost for that one unit out of those 10 units. So in mostly questions, you can be asked to find out cost per batch and cost per unit also. Clear? So under this method, the inputs are accumulated in the assembly line till it reaches the maximum batch size. After a batch size is reached, all inputs in the batch is processed for further operations. So let us say in a batch, 1,000 units are to be produced together. So the raw material will be incurred for all those, whatever the raw material or all the total accumulation of cost will be done first for 1,000 units. So when all the raw material is made as input or all the cost has made as input, then for 1,000 units, then the processing will start. So processing will start only when the total input for 1,000 material to be manufactured will be inputted into the system. All right. So without wasting any time, we'll just go to this illustration. All right. Let us try to understand this illustration. Arnav Confectioneries owns a bakery which is used to make bakery items like pastries, cakes, and muffins. AC is used to bake at most 50 units of any item at a time. At a time in one lot. How much is the batch size? So 50 units is the batch size. It is called as the batch size. Clear? So in one batch, in one lot, 50 units will be manufactured together. All right. A customer has given an order for 600 muffins. To process a batch of 50 muffins, the following cost would be incurred. So material, wages, and oven setup cost. So this cost is for per 50 muffins. That means for one batch. This is the cost for one batch, not for one unit. I told you the interpretation of the question is very important. Clear? So the following cost would be incurred for a batch of 50 muffins. So this is the cost which is given. You have to understand the question first. So the batch size of this company is 50 units at a time. They have got an order of 600 muffins. And the cost per batch, that means the cost for one batch, that means 500 is per batch. 500 direct material cost is for 50 units. That means for one batch. It is not for one unit, but for one batch of 50 units. Direct wages and setup costs. AC absorbs production overhead. See now, we have got the variable cost here. So this is the variable cost. Why? Because whenever per batch or per unit cost is given, it is a variable cost. Now overheads are always absorbed. So here also the absorption rate is given. 20% of wages cost is direct wages cost is overheads absorption. 10% is added to the total production cost to allow for selling, distribution, and admin overheads. So production overhead is 20% of direct wages, and rest of the two overheads. We have three total overheads: production, admin, and selling and distribution. So production will be absorbed at the rate of 20% of direct wages, and selling and administration and distribution overheads are absorbed as a basis of 10% of total production cost. Clear? Then 25% of sales value. So determine the selling price for 600 muffins. Clear? So how you have to do again? Statement of cost. So it will be per batch, because this is a batch costing. So total cost and cost per batch you also have to take. Clear? So I'm just erasing this off. Yeah. So it will be cost per batch. Clear? So cost per batch and total cost you have to take. So first of all, direct material you have to take. Direct material 500 per cost per batch is already 500. Direct labor is 50 per batch. Is cost per batch of 50 units. Okay. Then oven cost is also 150 per unit. Now calculate total cost 500. Now you have to calculate for 600 muffins. Now, first of all, you have to calculate how many batches you have to run. If 50 units in one batch and you have to produce 600 units. So how many batches? 600 divided by 50. If 50 units in one batch, then how many batches? You are going to run 12 batches. All right. So 500 is the cost for one batch. How much is the cost for 12 batches? So you have to run 12 batches. Clear? This cost is for one batch. So 12 into 500, 6,000. 12 into 50, it is 6,000. It is 600. Okay. Now calculate the oven cost. It is 1,800. Clear? So direct material, direct labor, and oven cost, they are cost per batch. That means cost per 50 units, not for one unit. This is the cost for 50 units. So you have to calculate for 12 batches. So just multiply it by 12. I hope you have understood this. Yes, you have to multiply it by 12. Setup cost, yes, setup cost is the cost of production only. Any variable cost is a part of cost of production. Yes, 12 batches. Yes, it's 12 batches. Muffins means cakes. You have seen, see, it's one cake, the fruit cake, the bakery cake. All right. So muffin is a small cake. Small cakes, they give separately the cake. You must have seen in the confectionery shop. So next time you go to the shop, ask muffins that you want a muffin. So just go and get the muffin, eat the muffin, and then do this question. So you will understand. So next time go to a bakery shop and ask for a muffin. So they will give us small muffins. So this bakery is also producing those muffins. All right. Okay. So Kavita, next time go to the bakery shop and have a muffin and then come to solve this question. You will understand it better. All right. Okay. So we have to find out for 12 batches. So this is the cost for 12 batches. Now let us see the production overheads. Okay. So production overheads, add the production overheads. Now you have to calculate the production overheads. They are absorbed as 20% of direct wages. Direct wages are 600. So 20% of direct wages means production overhead 120. Production overhead will be rupees 120. It's 20% of direct wages. Direct wages are 600. So 20% of direct wages is production overhead. All right. Till production overhead, you have the total cost of production. Total cost of production. Calculate the total cost of production. Total cost of production. Calculate the total cost of production, please. Can you give me the total cost? Can you give me the total cost? 6,000 plus 600 plus 1,800 plus 120. Total cost of production. Can anybody okay. Total cost of production. I've got the answer. 8520 is the total cost of production. Now it's the time for adding selling, distribution, and administration overhead, 10% of the total. So add selling and distribution and administration, 10% of total cost. It's 852. Keep on calculating cost per batch also. You have to calculate cost per batch also. How much is the cost per batch for production overhead? 120 divided by 50. Divided by 600 into 50, it will be 10. Clear? Calculate the cost per batch also side by side. So how much is the total cost? Total cost. 8520 plus 852. It is 9372. 9372 is the total cost. We have calculated the total cost as 9372. All right. So I'm just erasing it off here. Okay, 9372 is the total cost. Now, total cost 9372 plus profit is 25% on sales. Now you tell me how to calculate the profit. I've explained you how to do it. 9372 is the cost, right? 25% is on sales, but you have to calculate it on cost. So how are you going to do it? 9372 into 25 divided by 75. 9372 into 25 divided by 75. It is 3124 is the profit. All right. You have to calculate the selling price for 600 muffins. Calculate the sales first. 9372, 12496 is your sales. Clear? So students, this is the total cost. Total cost, we have added the profit, which is 25% of sales. 25% of sales, but you have to calculate it on cost. Cost has to be less than 100. So 9372 into 25 by 75, the profit is 3124. The total sales is 12496. Divided by 600, you will get the selling price for 600 muffins. 12496 divided by 600, you will get the selling price, which is 20.83. 20.83 is your answer. The selling price for 600 muffins is 20.83. Students, any doubt here, please ask. Any doubt here? Yes. 20.83 is per muffin, but per batch is 12496. Per batch will be divided by into 50 divided by 600. Per batch will be 1041.33. You have to calculate the cost per batch also. Cost per batch also should go simultaneously along with total cost. Clear? This cost is for 600 muffins and batch cost is for 50 muffins, which is the batch size. All right. So 6,000 is for 600 muffins, so 6,000 into 50 divided by 600. Of course, you will get 500. Similarly, you keep on doing this for every item of cost. What is the production overhead? Batch size, batch cost, cost per batch of production overhead. 120 into 50 divided by 600, it will be 10. Yeah. So any doubt? Yes. 1041 is the cost selling price per batch. 20.83 is the selling price per muffin. Clear? 1041.33 is the selling price for 50 muffins. But 20.83 is the selling price for one muffin. Cost per unit, cost per muffin. Clear? So this is how it is done. Any doubt? Students, you have to see cost per batch will come under the cost per batch column only. You have to calculate. Your final answer is 20.83, but 1041.33 will be included in the column of cost per batch. Clear? Now I'll be showing you the final answer. Let me show you this. All right. Okay. Okay, here it is. See, so this is the final answer, 20.83. But this is the cost per batch only. It is coming here. You are not calculating it separately. You have to calculate for every element of cost. All right. So 6,000 direct material cost, but cost per batch is this. Direct labor, cost per batch. So you have to find out cost per batch also. Like in unit costing, you calculate total cost and cost per unit. In batch costing, you have to calculate total cost and cost per batch. Cost per batch will be for 50 units. So this 500 is for 50 units. This 6,000 is for 600 units. Clear? This 50 is for 50 units. This 600 is for 600 units. This you have to understand. This 1800 is for 600 muffins, but this 150 is for 50 muffins. Clear? Similarly, this sales is for 600 muffins, but this selling price is for 50 muffins, and this selling price is for one muffin. All right? Any doubt now? Yes, cost per batch you have to calculate. It will not be given separately in the question. This is a question of batch costing. So like you calculate cost per unit, here you have to calculate cost per batch. You have to calculate it for every element of cost. Clear? But cost per unit you are calculating in addition. So in most of the questions, you will be required to find out cost per batch and cost per unit also. See, cost per batch, so you have to calculate. But if cost per unit or selling price per unit is also asked, then you calculate that also. But cost per batch or selling price per batch or profit per batch, you have to calculate because it's a question of batch costing. All right. I hope you have understood this. Now, how you are going to calculate? 12496 is for 600. So 50 divided by 600, you will get 1041. Okay, because 12496 is for 600 and you have to calculate it for 50 because cost per batch is 50 of 50 muffins. Now I think you have understood. Okay, per batch is not a hidden question. You have to calculate because it is a batch costing question. All right, students, let us move on to the next question here. I hope you've understood this question, all of you. I hope there is no doubt in this question. Okay. Now the next question. It's going here and there. Right. Just try to understand this question. Rio Limited undertakes to supply 1,000 units of a component per month for the month of January, February, and March. All right. So they undertake 1,000 units. Just look at the question. Take note of the question. Good. Yes, you can do it like this also, Muhammad Aslam. You can calculate 1041.33 divided by 50 also. Okay. Okay, Danish, I'm happy that you've understood. Please take a note of this question. Try to understand. Okay, so material and labor will be booked at actual as always. Overheads are levied means absorbed. Overheads will be absorbed. What is the rate of absorption? Per labor hour. Overheads will be absorbed per labor hour on the basis of labor hour. The selling price is given at 15 per unit. Clear? So what they are asking us to do? Rio Limited undertakes every month a batch overheads are levied. The selling price calculate profit per unit of each batch. Profit per unit of each batch. That means we should have the total cost and then we should have the cost per batch. Okay. And then the per unit also of each batch. So cost per batch so we'll calculate and then per unit of each batch. So we have to calculate here again per unit also. Here. And overall position of the order for 3,000 units. See what they're asking us to do. They have given us the information for 3 months and there are different units on 3 months. For January 1250, February 1500, March 1000. So they are separate output for separate months, first all the 3 respective months. Then they are asking on the basis of this information, whatever we will be calculating, we will apply the rate per unit for 3,000 units also. Clear? So we will be calculating the cost per unit, the selling price per unit we already have. Then the profit per unit we will calculate. So once we will have the cost per unit, profit per unit, with that per unit rate, we will apply for 3,000 units. Clear? So first we have to calculate. Now how to calculate it? We'll be calculating the total cost on the basis of this information. Then total cost divided by their respective units. We will get the cost per unit. That cost per unit we will be applying on 3,000 units. So that will be the last step. Clear? Now material cost we already have. So batch size you can write it over here. 1250, 1500, 1000. And of course the total. Total has to be there always. So material cost you can write. Material cost is there. These are the units. These are the units. I hope you're able to see. Yes. So these are the units. 6250, it's given. 9,000, it's given. 5,000, it's given. Do the total of material, please. Total of material cost. 6250, 9,000 plus 5,000. For all the 3 months, you have to calculate the total for all the 3 months per element of cost. How much is the total of material? 6250 plus 9,000. How much is the total of units? Total units. Do the total of units also. So 2250. 22, I'm writing the total over here. 2250 is the total material. 2250 is the total material. Then the labor cost is given. Labor is given. 2,500. 3,000, 2,000. The labor cost is also given to you. Total of labor cost, please. Total of labor cost also. 7,500 is the total labor cost. So direct cost is done. Now is the time to basically absorb the overhead. See, now how do you have to do? Labor is paid at 2 per hour. Labor is paid at 2 per hour. Labor cost is given. And labor rate per hour is given. Can't you find out the labor hours? 2, that means 1250 hours for January. 2 means 1,500 hours for February. How we are going to do it? 2 per hour and labor cost is given. 2,500 divided by 2. 3,000 divided by 2, 2,000 divided by 2. So these are the labor hours for these 3 months for this particular batch. These are the labor hours which were used to produce the units of this particular batch for January, February, and March. These are the total labor hours for the whole company or for the entire department. The total labor hours were 4,000 in January. Out of this 4,000, 1250 was used for this particular batch. In February, out of 4,500, 1,500 labor hours were used to produce for this particular batch. In March, out of 5,000, 1,000 was used to produce for this particular batch. All right. So this is the total labor hours for the whole department. From here, you will be calculating the overhead absorption rate. This information is to calculate overhead absorption rate. Total overheads divided by labor hours. So 12,000 divided by 4,000. So the absorption rate for the month of January is 3. For the month of February is 2. 9,000 divided by 4,500. We have to calculate the overhead absorption rate. Overhead absorption rate is calculated on the basis of the information of the entire department. Total overheads divided by total labor hours. Total overheads divided by total labor hours. Total overheads divided by total labor hours. So this is the overhead absorption rate. This is the overhead absorption rate. Total overheads divided by total labor hours. So on the basis of the absorption rate, you have to calculate the overheads for this batch. Clear? So rate is here, hours are here. Just multiply 1250 into 3. 1,500 into 2. 3 into 1. Yeah? So this is the overhead absorption rate. Now you can calculate the overheads also. How much are the overheads? 1250 into 3. 3750. 1,500 into 2, 3,000 and 3,000. So these are the overheads we have calculated. I'm again explaining you. Material and labor are given directly, but we need to absorb the overheads. For the overheads, we need the labor hours for this batch plus the absorption rate. Absorption rate will be calculated from this information, and hours we have for this batch, we have the hours, how we have calculated. Labor cost for this batch plus rate per hour. So 2,500 divided by 2. So labor cost divided by rate per hour will give you the labor hours for this particular batch. Here we will get the overhead absorption rate. Rate, you will multiply the labor hours for the batch. You will get the overheads for that batch. And please do not skip the total also. Total material for all the 3 months. Total labor, total overheads must enter the total also. Yes, very good. Yes, very good. So that is the total overhead. Total overheads are also 9750. These are the total overheads. So we have the total material, total labor and total overheads. We have the any other thing we have left? No. So we have taken the material cost, the labor cost, the total cost. We have the total cost now. Total material, total labor, total overheads. We have the total also, and we have the month-wise also. For January, we have the total cost. For February, we have the total cost. For March, we have the total cost. We know the selling price per unit. That is 15. All right. Can you calculate the sales? We have the selling. We have the numbers, the units for every month. So 1250, now how do we calculate the sales? 1250 into 15, 1,500 into 15, 1,000 into 15. Calculate the sales month-wise and the total. And calculate the profit also. Students, you know the sales. You can calculate the sales. We have calculated the cost. Can't you calculate the profit? Please calculate profit. Total also and month-wise also. Total cost for January, February, March, and for all the 3 months, the total cost. Total sales, January, February, March, per unit selling price is given. Units we already have. So total sales we can get, and month-wise sales we can get. Profit month-wise we can get, and profit per unit also the total profit also we can get. All right. So can you calculate? Very good. Excellent. Many students, okay. Aslam, I have seen it. I've seen it, okay. Any doubts so far, students? Any doubts so far? Please be ready with total sales, the total cost, and total profit. That means month-wise also and total also. Complete the question month-wise also and total also. All the three things. Total cost we have calculated, material, labor, and overheads. Total cost is there. We have calculated. Sales we can calculate. Selling price is given. Units we have. So total sales month-wise and total profit month-wise and total. You should be ready. Okay, Dhyanesh, Aslam, Pranav, you have calculated it. Any doubt so far? Any doubt, anything which you have not understood? Very good. So Dhyanesh, yes, profit is sales minus total cost. So I'm taking you to the statement of cost. Just have a look here. Just have a look here now. So we have the total units, see total units of the batch for all the 3 months. Selling price we have, because sales per unit is given in the question. You just have to multiply it with the number of units. So 15 into 1250, 15 into 1500, 15 into 1000. So sales we have, cost we have calculated. This is the total cost. Clear? So sales minus cost. Month-wise also. See, sales minus total cost, sales minus total cost, sales minus total cost. So we have the profit per batch. Profit per batch means per month here. So we have the profit per batch. Now cost per unit and profit per unit. Cost per unit is 12,500. Units are 1250. Here also see, cost per batch also we have and cost per unit also. So in batch costing, cost per batch you have to calculate. It will not be given separately in the question, but cost per unit you may be asked also to calculate. Clear? So total cost, this is the total cost. Total cost is 12,500. Units are 1250. Cost per unit is 10. Total cost 15,000 divided by 1500, 10. Total cost 10,000. Units are 1000. Cost per unit is 10. So how will be the profit per unit? You can calculate. Selling price per unit is 15. Cost per unit is 10. So profit per unit is 5. Profit per unit is 5. Clear? So the total units, total sales given, this we have calculated. Overheads as per the absorption rate. We have got the total cost. So total sales minus total cost, and month-wise also sales minus cost. We have the total cost, we have the total profit, we have the cost per unit and profit per unit. Clear? So either you can calculate 15 minus 10 or 5, or profit 6250 divided by units. So 6250 divided by 1250 will come out to 5. 7,500 divided by 1,500 again is 5. So profit per unit you can calculate any which way. So we have the selling price per unit, we have the cost price per unit, and how we will calculate for now? You have to calculate this information. You have to calculate this information for 3,000 units. Now is the time to calculate the final amount for 3,000 units. So selling price per unit is 15. So 3,000 into 15 is the selling price. Cost per unit is 10. 3,000 into 10 is cost per unit. So it will be 45,000. Cost will be 30,000 and profit will be 15,000. Clear? So for 3,000 units, you have the cost per unit, selling price was already there. You have calculated the profit per unit also. Once you calculate per unit, apply it on 3,000, which they are asking you to do. So you have to calculate the profit and cost for 3,000 units. So you have calculated from the information given in the question and then apply it on 3,000 as the last part of the question. All right. Students, any doubt? Yes. Cost per unit is 10 and profit per unit is 5 for all the 3 months. No, it is not necessary, Aslam, that cost per unit or profit per unit of each batch will be equal. It's not necessary. All right. So this is the last part of the question, like we have done. Sales value, but now we have to write for the overall position. Sales value, 45,000, less cost, 30,000, and the profit is 15,000. So here you go, the final answer, 15,000. Students, I hope you have understood this. Let me show you the final look of the question. All right, let's move forward now to the last segment of the session, economic batch quantity. This is similar to what you have done in material, economic order quantity. So economic batch quantity tells you, it helps you to find out how many units you should produce in a batch. Let us, in this question, it was, in the last question, it was 50 muffins in one batch. All right. So how many units you should manufacture in one lot? That would give you the minimum cost. That is the significance of economic batch quantity. Economic batch quantity. How much should be the quantity in one batch so that it is economical for us? The cost is economical. I'm repeating, how much quantity we should manufacture in one batch. Clear? So that it is economical for us, so that the cost is the minimum. All right. So as the product is produced in batches, the lot size chosen will be critical in achieving the cost. The total production cost. So the total cost under batch production is machine setup cost and inventory holding cost. Inventory holding cost means whatever you are producing. All right. It will be in the inventory. It will be in the stock. So it carries maintenance. It carries the holding cost. You have taken the loan also. You are paying interest also. There could be the risk of obsolescence or destroy, or they get damaged. So inventory carrying cost, inventory holding cost, or storage cost is what does it mean. So these costs actually incur when you produce in batch. There is a machine setup cost also. Machine takes some time to set up before it is run. All right. So if the size is higher, the setup cost may decline because lesser number of setups will be required. So let us say if the total demand is 5,000 units, and if you are making a run of, let us say 1,000 units in one lot, that means you will be needing 5 batches. All right. In 5 batches, those 500,000 units will be produced. Let us say you are producing in 500. That means you will be requiring 10 batches. So if the number of batches will be more, the machine setup cost will be more, because for every run, the machine has to be set up again and again and again. So higher the number of batches, the machine setup cost will be higher. Lesser the number of batches, the machine setup cost will be lesser. Yeah? But the units in inventory will go up. So if I'm producing 1,000 units in one batch, the inventory holding cost will be high, because at one particular point of time, 1,000 units will be there in the stock to take care of. But if I'm producing, let us say 500 units in one batch, there will be lesser inventory to take care of. All right. So it's a vice versa. Higher the units in one batch, machine setup cost will be less, but inventory holding cost will be more. More the number of units and lesser the number of units in a batch, setup cost will be high, but inventory holding cost will be less. So it is vice versa. If the lot size is lower inventory holding, because there will be less stock in inventory with higher setup cost. Economic batch quantity is the size of a batch where total cost of setup and holding is minimum. Clear? Similarly, in EOQ, economic order quantity, whatever the cost comes out to be, that how much material should be purchased in one order. Clear? It is economic order quantity. It is economic batch quantity. How much quantity to be produced in one batch? That means the total cost for that batch or production run should be minimum. Now, how we are going to do it? Similarly, like we used to do the economic order quantity, exactly same, under root 2 into D into S. So D is the annual demand of a product. S is the setup cost per batch. It is per batch, not per unit, per batch. And carrying cost per unit of production per annum. It is always annual. Carrying cost per unit of production. So what is the carrying cost per unit per annum? It is always carrying cost per unit per annum. That means if we keep the inventory, 1 unit of inventory, the whole year, how much will be the cost? Per unit per annum. 1 unit holding cost for entire year. What is that? Means the C, carrying cost per unit per annum. So we'll do the example also here. Monthly demand is 500. A lot of students make this mistake. You have to find out the annual demand, not monthly. So you have to find out the annual demand. That means you have to do 500 into 12. It's monthly demand. So 500 into 12. Clear? It's mentioned here. 2 into 500 into 12. Setup cost per batch, not per unit. Per batch is 60. Carrying cost per unit per annum. So 10% per annum and per unit is manufacturing cost per unit is given. So 20 into 10%. So 10% is already per annum and you want per unit per annum. So unit cost is given to you. Calculate 10% on unit cost. So that will be 0.1 of 20. 10% of 20, it will be 2. Clear? So 600 units. That means the optimum size of a batch is 600 units in one batch. Clear? So in one batch, how much units you should produce? 600 units. That will be the optimum size of the batch. How much batches you will require? How much run you will require? If 600 units you can produce in one batch, together, 600 units you can produce together. Out of how much is the total requirement? 500 into 12. You require total 6,000 units, and in one batch you can produce 600 units. How much batches you require? 10. You require 10 batch size. 10 batches you require to produce total 6,000 annual units. In one batch, in one lot, 600 units will be manufactured together simultaneously. Clear? So one batch, 600 units. How much batches you will be requiring the whole year to meet the demand of 6,000 units? 10 batches you will require. Clear? Rate of interest is nothing but the carrying cost. See, carrying cost is what, let us say you must have taken a loan to buy the inventory. So carrying cost is any cost which you are incurring for producing this output. Any cost which you are incurring for producing this output will be your carrying cost. Interest cost or obsolescence cost or logistics cost or insurance cost or freight cost, any cost which you are incurring on the manufacture of these units will be called as carrying cost. You are incurring this cost because of these units. So everything comes under carrying cost. Interest cost or logistics cost or any other financial cost or the storage cost or obsolescence cost or depreciation, any cost which you are incurring for this manufacture will be called as carrying cost. All right. So rate of interest is one part of the carrying cost only. If it is given in percentage, you have to calculate on per unit. And it's generally the manufacturing cost per unit on which you will calculate, because the carrying cost is on manufacture only. And the carrying cost you want is per unit. So you will calculate on cost of manufacture per unit only. Clear? It can be either in absolute terms, you must be given, let us say 5 rupees per month. So you multiply it by 12, you will get the annual carrying cost. Or the second way is you will get it in percentage. So whenever carrying cost is given in percentage, you will calculate that percentage on the cost of manufacture per unit. Clear? I hope you have understood this. No, here average, yes, average you can mean average per unit also. All right. So moving further for another question. So this Messrs KBC bearings, please take note of this question. To supply 48,000 bearings per annum. So this information is already per annum. All right. You have to take note. You want per annum. If it's monthly, multiplied by 12. If it's weekly, multiplied by 52. If it's daily, multiplied by 365. You need the annual demand, annual. So if it's monthly figure is given, like in the previous question, multiplied by 12. Daily figure is given, multiplied by 365. Weekly figure is given, multiplied by 52. You have to find out the annual demand. Clear? Here annual is already given. It is estimated the cost ₹1. See, here absolute terms the cost is given. In the earlier question, the inventory cost was given as a percentage. In this question, it is given in absolute terms. That means in absolute rupee. ₹1 inventory holding cost per bearing per month. You want the carrying cost per bearing per annum. Carrying cost also you require per annum. So you have to multiply it by 12. ₹1 into 12. So the carrying cost will be 12 per annum. It is 12 is per unit per annum. Clear? It's per unit, it's U. So ₹1 is per bearing per month. You need per bearing per annum. So multiplied by 12. And setup cost per batch is 3,200. So optimum size, I think you can calculate how you will calculate the optimum size. 2, the fixed multiple into annual demand is 48,000. Setup cost per batch is given. It's not per unit. Again, I'm repeating. Divided by inventory carrying cost per unit per annum, it is 12. Per unit per annum. ₹1 is 1 unit per unit per month you need for per annum. Can you calculate the optimum run size, please? Can anybody calculate optimum run size? Optimum run size 2 into 48,000 into 3,200 divided by 12. Yes, it's 5060. It should be 5060 units. 5060 units. All right. Now, 5060 units it is coming. Now, how many run? If in one lot 5060 units are being calculated, how many runs will it require? How many runs? So 48,000 divided by 5060. 9.48 runs. 9.48 or 10 runs it will require. That means 10 batches. In one batch, if 5060 units have to be produced, then in how many batches it will take to produce full 48,000 bearings? So almost 10 batches or 10 machine runs it is going to take. Clear? State what will be the interval between two consecutive runs. So if 10 runs are required, and what is the interval between two runs? Here 10 runs will be required, 10 batches will be required in the whole year. So how many interval? How many intervals means what would be the interval? So you can divide 365 divided by 10. For the second thing, 365, the number of days in a year, divided by 10 runs. So interval between two runs should be 36.5 days actually. Clear? So interval between two runs will be 36.5 days. So 365 days divided by 10 runs. Clear? So 36.5 days should be the runs. Yes. So 9.49 or 10 runs. See, you cannot run it in fraction. So you have to take to the next absolute figure. 9.49 fraction you cannot take. You have to convert it into next absolute figure. That means you cannot make it as 9. It has to be more than 9, so it can be 10. So make it as 10 runs. Interval between two consecutive runs. That means the total runs will happen in the whole year, 365 days divided by 10, 36.5 days. The run will be. Find out the minimum inventory holding cost. Minimum inventory holding cost, there are two costs now. 5060 is the units. All right. You have to find out the minimum inventory holding cost for this EBQ. For this EBQ, what will be the inventory holding cost? Inventory holding cost, that it is made up of two things. First, the setup cost, and second, the inventory holding cost. All right. So I'm just erasing this off so that I have that. I need the space to do it. Okay. So first is the setup cost. How much runs we require? We require 10 runs. And the cost per run is 3,200. Clear? So 3,200 per setup into 10. It will be 32,000. 3,200 into 10, it has to be 32,000. Second is the inventory holding cost. Inventory holding cost. It will be, inventory holding cost should be half of EBQ. So half of EBQ 5060 divided by 2 into carrying cost per bearing per annum. So average of the EBQ, that means half of EBQ. The idea is we will assume that 5060 units are being manufactured in one lot at a particular point of time. Half of this inventory will always be in the stock. So we are assuming average inventory will always be in the stock. 5060 units will not be in the stock the whole year. So, but we don't know how much will be it in the stock the whole year. So we take the average. We are assuming half of this inventory will be there in the stock the whole year, so that we have to calculate the holding cost or carrying cost. Clear? That's why we take average. Average we take 50%. So 5060 divided by 2 into 12. So 5060 divided by 2 into 12. It will come out to 3,360. The fractional difference is because of we have taken the run as 10 runs. Clear? If we will take 9.48, then exactly the same amount is going to come. Because we have converted 9.48 to 10, that's why some difference between two figures. Otherwise, setup cost and inventory holding cost is the same for the EBQ units. All right. But here we have converted the fraction. That's why there's a sum of the difference. So the total minimum inventory holding cost will be total. All right. Or 3,360 also you can calculate. Any doubts so far? Yes. So let us see how it is calculated. Okay. 5060 we have calculated 10 runs, 36.5. They are just asking the inventory holding cost, average inventory into carrying cost per unit per annum. So 3,360. They're just asking the inventory holding cost. We have calculated the setup cost also. But they're just asking the inventory holding cost. That is 3,360. All right. So this is the solution for you. I hope you've understood. Yes. Any doubt in this question? Okay, yes, Piyush, they are just asking the carrying cost, the minimum inventory cost. So you just have to calculate 3,360. But you can calculate setup cost also. Your answer will not be wrong until and unless you have calculated 3,360. Any additional answer, they don't mind. Okay, so setup cost you can also calculate. But yes, in this question, they're asking just the minimum inventory cost, that is 3,360. I hope the students, the concept is clear. Okay, let us proceed to the next question. Hope you have taken the note of this question. Good. Setup cost, Aslam, there is no setup cost formula as such. It's just that The setup cost per batch is 3,200. How many batches you require? You require 10 batches. So 3,200 into 10. So there is no formula as such. There is no formula actually. It's just the concept. All right. So setup cost is for one setup. You need 10 setups to produce the whole the whole demand. So you just calculate 3,200 into 10. Clear? Let's move on to the next question. Okay. So this is the question. Read it through. Minimum inventory cost. Kavita. See, minimum inventory cost is, we always take the average inventory. Average inventory means average EBQ. Average inventory here means average EBQ. And average EBQ means 50% of EBQ. All right. That means we assume at a particular point of time, half of these 5060 will always be in the stock. So 5060 divided by 2. That means half of this stock will always be in the inventory to take care of. So average inventory means 50% of EBQ into inventory carrying cost per unit per annum, which we calculated as 12. So 12 into 2530 will be average inventory cost or the inventory return cost. Minimum inventory cost is the carrying cost. Yes, the total holding cost, the total carrying cost. See, carrying cost, inventory holding cost, or the minimum inventory cost, it means the same. Carrying cost, inventory cost, holding cost, it means the same. Hope now you have understood, Kavita. Let us move on this question. Please take note of this question. This question has been taken from your RTP, revisionary test practice. So Brostrom manufactures stent that is used by hospitals. Okay. So stent is the product. A procedure used to open arteries. Basically, it's a medical term. So the stent which is being used for open heart surgeries and to open the the blocked arteries. As per estimates provided by Pharmaceutical Industry Bureau, there will be a demand of 1 crore stents in the coming year. 1 crore stents will be the demand. Broston Limited having a market share of 10% out of 1 crore. See, 1 crore is the demand as a whole market. But Broston Limited has 10% of the market share. Information for you, the hidden information. So out of this 1 crore, Broston Limited, the market share, the demand for Broston Limited will be 10% of the total market demand. The cost, 3 rupees as inventory holding cost per stent per month. You need exactly this. You actually need inventory holding cost as per unit per annum. But you have per unit per month. Inventory holding cost is given as 3 per stent per month. You need per annum. So 3 into 12. So 36 per unit per annum. 3 is per stent per month. You need annum. You need per stent per annum. So multiplied by 12. You need to be very careful what you require and what is the information given in the question. Just don't take as 3. You have to take it as per annum. I'm repeating again and again. So it's 3 per. This is the mistakes which students do in exams. So 3 is per unit per annum, per month. You have to calculate 3 as per unit per annum. So multiplied by 12. The setup cost per run means per batch. Per run is per batch. 450. 450 is per batch. You don't have to, this is not per unit, it's per batch. So first of all, optimum size, number 1, optimum size, 2 into. Can you give me the annual demand for Broston Limited? Can you give me the optimum demand for Broston Limited? Optimum runs. From where you have taken optimum runs? Let us do one by one. First, let us find out the optimum run. EBQ is actually the optimum. Optimum is the most economical. Optimum run means they are wanting you to calculate economic batch quantity. How much should be the optimum run size? That means how much stents should be produced in one run, in one lot, in one batch. So that is optimum. Optimum means most economical. That will give you the minimum cost. Optimum means most economical, that will give you the minimum cost. All right. Yes. So if the total market demand is 1 crore, you have to take 10% of 1 crore into 10%. Yes, it will be 10 lakh into size is 450 divided by inventory carrying cost per month per unit per annum 36. Can I have the optimum run size, please? Can I have the optimum run size? Okay, 5,000. 5,000 what? The second mistake the students do. 5,000 is not rupees. It's units. Here it will be stents. What does this mean? That means 5,000 stents out of 10 lakh. 5,000 stents out of 10 lakh will be produced in one batch in one lot. 5,000 stents will be produced at a time simultaneously in one batch. If you will produce 5,000 stents in one batch, it will be most economical. All right. So second now. What is the minimum inventory holding cost? Minimum inventory holding cost. So 5,000 is the EBQ. Average of 5,000. 5,000 divided by 2. Average. Minimum inventory holding cost into 36. The answer for second. Average EBQ. Economic batch quantity is 5,000 stents. Inventory holding cost will be 5,000 divided by 2. The average inventory into 36. 36 is carrying cost per unit per annum, per stent per annum. How much it would be? 2,500 into 36. So 90,000 should be the minimum holding cost. 90,000 should be the minimum holding cost. Any doubt, students here? Any doubt? Very good. 90,000 will be minimum inventory holding cost. How it is to be calculated? Average inventory. Average inventory means average EBQ. Average EBQ means half of EBQ into inventory cost per stent per annum, which is 36. Clear? So 90,000 is the minimum inventory holding cost if you produce 5,000 stents at a time. All right. Any doubt so far? Any doubt so far? Yes, Aslam, you are always very quick. Priyanka, good answer. Okay. So now let us see the third question, the third part. Assuming that the company has a policy of manufacturing 6,000 stents. Now see, we are telling the company that you please produce 5,000 stents in one lot. But the company was producing 6,000 stents in one lot. Calculate how much extra cost the company would be incurring as compared to the optimum run suggested in one above. All right. So you have to calculate the total cost for 5,000 and 6,000. All right. So calculate the total cost here. I'm just erasing it off. I hope you have understood. So I'm just erasing it off so that I'll explain you the next part. I hope you have understood how we have calculated 90,000. Minimum inventory. Arnav, who is asking? Ismail, minimum inventory is half of EBQ. EBQ was 5,000. So half of EBQ was 5,000 divided by 2. See, this is the way we calculate. I think you missed here. Minimum inventory cost, we calculate it like this. Average inventory into inventory carrying cost per unit per annum. So in that question, average inventory was 5,000 divided by 2. Inventory carrying cost per unit per annum was 36. If I take you to the question, EBQ was 5,000, which we calculated. So 5,000 divided by 2 into 36, that will come out to 90,000. All right. Okay. So let me erase this now so that I explain you the third part. Okay. All right. Now you have to calculate for 6,000 units. And then if you are calculating for 5,000 units. Okay. Now for 6,000 units, first calculate the setup cost. See, you have to calculate both the cost. The setup cost and the inventory holding cost. So setup cost. If the economic batch size, if the batch size is 6,000, how much is the setup cost? 450. 450 for one batch. How many batches you will require if you produce 6,000 stents in one lot? You have to produce 10 lakh. Clear? So 10 lakhs divided by 6,000. You need 166. This is multiplied by 450. Okay. So 75,000 will be the setup cost. 75,000 will be the setup cost. How you're calculating? 10 lakh divided by 6,000 will give you the total setup runs into 450 you will get 75,000 as the setup cost. Inventory holding cost 6,000 divided by 2 into 36. 6,000 divided by 2, so 3,000 into 36. 1,08,000 will be the minimum holding cost if you produce 6,000 stents at one time. I'm repeating. If you're producing 6,000 stents at one time as the company policy, how much setup runs you require? All right, 6,000 for one batch. How much batches you will require? The total batches you have to produce are 10 lakh. So 10 lakh divided by 6,000 into 450. Clear? 75,000 will be the total setup cost. And the inventory holding cost, half of the average inventory into 36 will be 1,08,000. So the total cost if we manufacture, it will 1,83,000. 183,000 if we produce 6,000. Now, if we produce 5,000, how much will be the setup cost here? How much? 10 lakh divided by 5,000 into 450. The setup cost. 10 lakh into 450 divided by 5,000, it will be 90,000. And inventory holding cost, we have already calculated 90,000. Always remember, whenever you calculate economic batch quantity or economic order quantity, the cost will be equal. Setup cost will always be equal to inventory holding cost. So the total cost will be 1,80,000. Extra cost will be 3,000. Extra cost will be 3,000. So that's why we say 5,000 is the optimum run. Here it is proved. How we call it as optimum run? Because the total cost of the setup and inventory will be the minimum. You take any combination. You produce 7,000, you produce 10,000 in one batch, you produce 15,000 in one batch. You can experiment, trial and error you do on different batch size. You calculate as per different batch size. See, the economical batch size should be 5,000 stents in one lot. You make a trial and error exercise. You calculate the total cost by taking 5,000. Then the second you can take 6,000. The second you can take 10,000. The second you can take 15,000. You can take multiple batch sizes and calculate the total cost. You will find that with economic batch quantity, the total setup and inventory cost will be the minimum. All right. That is the significance of economic batch quantity. That's why we call it optimum batch size. Because if you will produce the batch size as per EBQ, the minimum cost will be the setup and the inventory holding cost. You calculate trial and error for every other batch size. You do this exercise and you will find out the minimum, the cost will be the minimum when you will do the economic batch size. So if you produce 5,000 in one batch, the cost will be 180. If you produce 6,000 in one batch, the cost will be 183. So as per company policy, they are incurring 3,000 extra cost. So that is the answer for the third one. Any doubt? Extra cost will be 3,000, not 3,150, Danish. You just calculate it again. Yes. Very good. Okay, you have calculated only the carrying cost. You can calculate the total cost also. This the third one, you can calculate the difference after calculating the total cost also. But you have just calculated for inventory and the inventory minimum holding cost. So minimum holding cost for 6,000 is 1 lakh. The minimum holding cost for this is 90,000. So yes, the extra cost comes out to be this, but you have to always compare with the total cost because it's a mixture of total cost, right? So setup cost plus inventory holding cost. So total cost is 183 and the total cost is 180. So the extra cost should be 3,000. Don't compare only inventory holding cost. I'm repeating, whenever questions like this comes, you should always calculate the total cost, inventory cost and setup cost, and then compare. Don't compare with only the holding cost. I'm repeating. If questions like the third part comes, you should always calculate the setup and inventory total cost. Clear? So setup cost and inventory holding cost for 6,000, setup cost and inventory holding cost for 5,000, and then compare. Please do not just compare by inventory holding cost. The answer can be misleading for other options. All right. So always calculate the total of setup and inventory holding cost and then only compare the difference. All right. So that's all for today. We have more questions. We will share this PPT with you and you can do a lot of practice. I hope you have learned a lot of concepts, how we approach the questions. So I really hope that this session will be very useful for you. Do a lot of practice, revise every question again so that you grasp the concepts better. All right. So I hope I'm able to explain you the concepts in a better way and this session is useful for you. So practice more and more. Very good. All right. Thank you, students. That's all for this session. Happy learning, happy studying. Best of luck to all of you.